Now let's look at the provisions of Article 11(1) of the OECD Model Tax Convention. So in this particular case, we have a foreign company, the same example that we took in the beginning, and there is a company in the source state. So what the Article 11(1) says is that interest arising in a contracting state. So if there is an interest which arises in the source state, this source state word has been something which we have added on our own. It's not a part of the OECD Model Tax Convention. And so there's a cumulative condition. First, interest should arise in a contracting state. And second is it should be paid to a resident of the other contracting state. So it arises in source state, it is paid to a resident of another state. Now, if the interest is paid to a resident of third state, so let's say the state X, that is not something that is going to get covered under that particular treaty. That may be covered under the tax treaty between the ESCO and this company in X jurisdiction. But if there is an interest which arises in the source state and it is paid to a resident of other contracting state, then such interest may be taxed in that other state, which means the right to tax such interest may be given to the state of residence. Now, some of the things which are relevant here is that the first thing is that interest should arise in a contracting state. Now, when can the interest be said to be arising in a contracting state? That is something that we will discuss in detail when we discuss Article 11(5). The thing is that this particular point is not similar to the taxation of dividend, which is Article 10. Article 10 says that the right to tax dividend will be with the company which makes the payment of dividend. So if the company itself is situated in the source state or is a resident of the source state, then the right will be given to the source state. However, for the taxation of interest, it says that interest should arise in a contracting state and it should be paid to a resident of the other contracting state. So paid, according to the OECD commentary, is a very, very wide term. What it means is that one, obviously, if you pay through cash, which is through a check, online transfer, etc., 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 everything is covered. But second, it also means that when the funds have actually been put at the disposal of the creditor, that also kind of means that the payment has been done. But if you look at the way this is worded, it would mean that the condition of arising and payment are cumulative, which means that if interest does not arise in the source state, it will not be taxable here. If the interest arises in the source state, but the payment has not been done, even then, Article 11(1) would not give the right to the source state to tax such interest. Of course, whenever the payment is made, at that point in time, that right would get restored, but not until then. The third is that such interest may be taxed in that other state. Now, there's a difference between the use of the word may be and shall. When the word is used as may be, that means that this state may have a right or may not have a right. But under this particular clause, when it uses the word may be, it means that it has the right, but that right is not exclusive. Whereas what it also implies indirectly is that even the source state has a right to tax such interest. So basically the key characteristics, if I have to just summarize for Article 11(1), are that interest should both arise, again as per Article 11(5), in the source state, and it should be paid. If it does not arise but paid, or if it is not paid but it does arise, then in that case it will not be taxable in the source state. The recipient should be a resident of the other contracting state. If the recipient is a same resident of the source state, then this provision is not applicable. If the recipient is a member of third contracting state, even then this provision is not applicable. Both the source state and the state of residence have the right to tax. There is no exclusive right given to the state of residence to have taxing rights over this interest income. And to ascertain whether interest has arisen, the provisions of Article 11(5) have to be interpreted. Now, another interesting question which comes up is, what is the meaning of interest under Article 11? In such a case, we need to refer to the relevance clause of Article 11, which may be Art 11.3 or otherwise 11.4 in some treaties. So the definition of interest has to come according to that particular clause.
Thank you for watching our video on international tax. In case you want to subscribe to our full course, you can go to the link courses.sortingtax.com. If you are an Android user, you can download our application, and when you go to this link, you can purchase the course here. In case you are looking for a different currency of pricing, you can click on the link given in the description here and purchase the course. Thank you.